please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello, good morning, welcome. This is the start of a new trading week. You're watching CNBC TV 18. It's Power Breakfast. I'm Mangla Malu in the Mumbai News Center. With me is Anisha Jain. Good morning, Anisha. Last two sessions, we saw a recovery. Wall Street ended well on Friday. The big trigger, though, will be the Gujarat Phase 1 elections. Initial reports suggest a BJP lead. That is positive for the markets.
Well, yes, certainly we've seen a very smart pullback with the last two trading session, 200 points up on the Nifty, and a very critical week, as you mentioned. There's FOMC meet as well to look forward to. So a lot of important cues ready to talk about today.
First up, let's take a look at the Asian markets. They opened well in the green, and now they're off the session's high. So if you take a look at the Nikkei, that one is just about above the flat line as we speak, opened with a gain of about 0.4%. No real change seen in the dollar, yen as well. Remember, this will be an important data point to watch out for over the next few trading sessions, given the strong US jobs report data that came in could strengthen the dollar ahead of the FOMC meet. Stronger dollar means weaker yen, better for Japanese exporters, could be better for the Japanese index itself. But across the Korean Strait, that index too, when I was tracking it, was mildly in the red as we speak, and right now is in the red as well. The key heavyweights nearly, Samsung Electronics and all of them weighing that index down. Good cues coming in, good gains coming on both straits as well as the Taiwanese index, both of them up about 0.3 to 0.6%. And as a result of that, the SGX Nifty is up 16 points as we speak. Remember, we'll watch out for how the day progresses after a 16-point uptick, given the cues that we have back home.
Okay, and in the US markets, they closed higher at record close after the release of a stronger than expected jobs report. Now, according to the Bureau of Labor Statistics, the US economy added around 228,000 jobs last month. The unemployment rate remains steady at around 17-year low of 4.1%. The data is likely to ensure that Federal Reserve will vote to raise interest rates when it meets this week. Tax reform also remains in focus as the House and Senate continue to work towards a unified tax plan that can pass in both chambers of Congress. Let's hear out Gary Cohn, the director of the U.S. National Economic Council, and what he had to say about the jobs report and the state of the U.S. economy.
We're continuing to grow jobs. If you look what's going on in the manufacturing sector, that's a sector that President Trump cares a lot about. We're at a 17-year low in manufacturing at 2.6% unemployment. We're continuing to drive people back into the labor force. We're still not growing wages in this country. We do believe that tax reform will help us drive real wage growth in the United States, which is something really important to the administration. We're not competitive today. We've got a 35% worldwide rate. When you've got a 20% territorial rate and you're looking to invest capital, the first thing you look at when you're making a capital allocation decision is your after-tax rate of return. We're now going to have an after-tax rate of return that competes with the rest of the world. It's going to make us competitive again.
All right, and in Europe, markets closed higher. Brexit, remember, that one continues to keep investors on their toes, with the UK and the European Union finally agreeing upon three particular issues that had earlier impeded the negotiations. So this paves the way for next phase of discussions. As a result of that, the FTSE, that one was the outperformer among the frontline indices, up about 1%, but big gains seen across the periphery. Pull up something like the Italian index or the Spanish index, both of them up almost about 1%, 0.6%. And if you take a look at the ATHIX, the Greek index, that one too was about 1.6%. Such a not spread across the emerging market space. The Russian markets absolutely flat, while the Brazilian index, that one was up about 0.75 or 0.3%. But remember, the big news was the Brexit. Speaking of Brexit, the Irish government has issued a warning to David Davis, the Brexit secretary, over suggestions the agreement has reached with the EU over the Irish border may not be legally enforceable and was merely a statement of intent.
And the Bitcoin buzz gets louder as the first futures trade in the cryptocurrency begins on the CBOE Futures Exchange. This as the Bitcoin roller coaster rolls on with sharp moves on both the directions. The cryptocurrency fell by almost a fifth on Friday by climbing almost more than 40% in the previous 48 hours. So how does the CBOE Bitcoin futures really work? CNBC's Bob Pearson gets us all the details.
As the price of Bitcoin has skyrocketed, interest in trading Bitcoin futures is also on the rise. So how does this work? The CBOE will start by listing 3 one-month contracts, likely for January, February, and March. So each contract is just 1 Bitcoin. Market makers will set an initial price for each month and trading will begin. So the January price will likely be close to the underlying cash price. The contracts are traded and settled in cash. So you get dollars. You don't get Bitcoin when you settle. How about the price? Well, there's many different Bitcoin exchanges, but CBOE uses Gemini. Gemini is a digital asset exchange founded in 2014 that allows customers to buy, sell, and store digital assets like Bitcoin. It's run as an auction. CBOE will be waiving all of its transaction fees for the month of December. After that, the basic retail rate is $1 per contract. That's what it costs to trade. So what is the margin rate? Well, right now, the CBOE has a margin rate of 30%. So if Bitcoin is trading at $15,000, you can purchase a contract on margin for $4,500. That's 30% of $15,000. How could you trade Bitcoin futures? Well, you should contract your broker, but so far, Interactive Brokers is the only online broker that has said they will allow trading, but with a much higher margin requirement, 50%. Fidelity, TD Ameritrade, and others are still taking a wait-and-see approach, it seems. So will the futures reduce or increase the volatility of Bitcoin? Well, that's the big question, and nobody really knows. Some experts say volatility could spike in the short term amid an absence of sellers, but reduce volatility in Bitcoin in the long run. We'll just have to see. The bottom line is this. Who knows if all this hoop around futures contracts is going to make Bitcoin respectable, but it's a big step toward making Bitcoin a little more open and transparent.
All right, let's shift focus to the currency space. The dollar was steady in early trade today, underpinned by expectations of a higher US interest rate, while the Bitcoin sees the spotlight as futures of the cryptocurrency begin trading.
In the world of commodities, US crude rose by 1.2% on Friday, but still posted its biggest weekly loss in 2 months. Strong Chinese imports supported crude oil futures on Friday. According to Jefferies, global 2018 demand growth is seen at 1.5 million barrels per day.
From the precious metal space, gold prices trade steady early today, holding above a 4-month low hit last week amid a firm dollar.
Well, there has been widespread condemnation of President Donald Trump's decision announced on Wednesday to reverse decades of U.S. neutrality on the State of Jerusalem, which cuts to the heart of the ongoing conflict between Israel and the Palestinians. Now, the Arab foreign minister late on Saturday urged the United States to abandon its decision to recognize Jerusalem as Israel's capital, saying the move would increase violence throughout the region. A further series of protests was seen on Sunday in Cairo, Beirut and Rabat, the Moroccan capital. Violence fled near the U.S. Embassy in Lebanon, as well as speaking in Paris after talks which President Emmanuel Macron, Benjamin Netanyahu, Prime Minister of Israel, Palestinians must get to grips with the reality that Jerusalem is Israel's capital in order to move towards peace.
Jerusalem is the capital of Israel. It's been the capital of Israel for 3,000 years. It's been the capital of the Jewish state for 70 years. I think the sooner the Palestinians come to grips with this reality, the sooner we'll move towards peace.
Welcome back. You're watching Power Breakfast on CNBC TV 18. Well, back home on Dalal Street, the bulls continue their onward march. Both the Sensex and the Nifty gained close to 1% each for the second day in a row. The Nifty is back above that 10,250 mark. The broader market also rallied in trade. Nifty Bank and Midcap saw gains of close to 1% each. But how are the cues stacked up for the day today? Manglam will tell us more. Manglam, over to you.
Well, we have 2 important cues coming in. First is the Gujarat elections over the weekend, and second is the global cues, which are strong. So if you take a look at the Nifty over the last 2 trading sessions itself, there has been a very smart recovery. 220 points in the last 2 sessions. Now, it is important to note 220 points because remember, from the high point of the day, the Nifty has corrected about 446 points. So technical analysts say that 50% recovery is where the first headwind comes in. So let's see whether the markets move higher from this point or not. Nifty also crossed the 20-day moving average of 10,247. So that is something that we need to watch out for, given it's perilously close to that mark itself. So today's up move will be very, very important. And talking about the up move, the SGX Nifty, when we started the show, indicated an uptick of close to 11, 12 points, 13 points, and now that has moved higher to the tune of about 22 points, which is a positive. Now let's move to the big positive cue, Battle for Gujarat. The first one, phase 1 of polling of about 89 seats took place over the weekend. Irrespective of the claims made by the opposition with regards to the EVMs, etc., the initial reports do suggest BJP is leading in phase 1. Once that happens, that is something the street likes. We will see some green on the screen, and it is very important then to watch the phase 2 as well as results on December 18. The market usually moves ahead of the results itself in anticipation. Secondly, global cues are positive. Wall Street posted a record close. The jobs data came in very strong, 2.28 lakhs versus expectations of 2 lakhs. So that means that the Fed policy may see a hike, which is what a lot of people are expecting. So watch out for that as well. And both these cues, remember, are in this week itself. That is something the markets will watch out for. So if the markets move higher, is there more room for the markets to move higher? Well, yes, because the FIIs, they continue selling at all rallies. In Friday's session as well, they sold about 675 crores in cash markets, 745 crores in index futures. 3-4 days in a row, they have been selling in index futures. By doing that, the FII longs in index futures, that one's dropped to 52%. That means 48% of the FIIs are still short on index futures. An up move will cause short covering there. Signs of short covering were seen on Friday's trading session itself in the index option space, where the FIIs covered about 13,500 short contracts in index calls and added about 19,000 long contracts in index calls, which is a positive. Add to that, they also added 13,000 shorts in index puts, which makes the market believe that the lower end is supported. 10,200 was the put that was written with a lot of aggression. So those are levels that I'll be watching out for. Remember, further up move may lead to further short covering.
Okay, so more positive than negative for the Indian markets today, and short covering is possible as well. But what are the stocks that we should keep an eye out on?
The first group of stocks I'll be watching out for, Anisha, are the FMCG stocks. Okay. Why? Because one, ITC regained its momentum on Friday's trading session. The momentum, primarily on account of the momentum, HUL is at a record high. So these two stocks I'll be definitely watching out for from the frontline space. From the frontline space, we'll also be watching out for Ultratech, because the board has approved a 3.5 million tons integrated cement plant in Rajasthan for an investment of 1,850 crore rupees. So that comes to around $78 to $79 per ton, and that is lower than the replacement cost of about 120. So this is a positive for Ultratech. Max India, that is something that I'll be watching out for, given the Delhi Shalimar Bagh Max hospital's license was cancelled on Friday just after the markets ended. So that is something we'll be watching out for. Also keep an eye out on Fortis, given that there was an FIR against that too. Capital First, that stock will be in focus as it's raised about 180 crore via issue of NCDs on a private placement basis. Capital First has been consistently raising capital over the last few months. Rushil Decor, a small cap company, will be watching out for that. They've made advance payment towards land for its new MDF plant. I'll be watching out for a lot of these banks, as well as all the companies which are related to the NCLT cases, the likes of Amtech, Bhushan, because remember 13 December is one, that's banks in focus. The graphic that's running right now is for Rushil Decor. The reason why I'll be watching out for banks is because 13 December is the day where the resolution for NCLT cases, the deadline ends. Right. If the resolution hasn't been done by then, the banks will have to provide up to 50% of their loan amount for the banks for the exposure that they have for those for the accounts, the NCLT accounts, and that will not augur well for their bottom line. So that is something I'll be watching out for. And if there is a resolution, then positive for all those companies, Amtech, Bhushan Steel, etc. And then the results, they still have continued. The second quarter results, Ukal Fuel, good set of numbers, profit after tax doubled at 16 crore rupees. Sharda Motors as well, good set of numbers, revenue growth of 17%, profit after tax grew at 63%. KDDL, the guys who make Ethos watches, 21% revenue growth, 40% net profit growth. Aegis Logistics, revenue growth at 83%, net profit grew by almost 108%. That's on account of the higher gas prices that there were as well. Federal Mogul as well, a steady set of numbers, 5% revenue growth, 8% net profit growth. And we have Thyrocare, the revenues grew by about 5%, margins grew by about 200 basis points. And apart from that, we had CLSA on Arvind too. They've upgraded their price target.
Okay, Manglam, thank you so much for getting us that extensive list. But we've got for you one of the biggest foreign investor voices in India, Mark Mobius of Templeton EM Group, to give us a sense of what is the road ahead for the Indian market. Listen in.
A lot of people have said, well, if commodities are down, emerging markets can't do well. Well, commodities are down and emerging markets are doing very well. So I think that's one of the mistakes that people make. They tie the performance of emerging markets to any particular variable. A lot of people were worried about interest rates. You know, they said if interest rates in America go up, emerging markets will be in trouble. Well, if you go back 10 years, you'll find there's very little correlation, consistent correlation. Sometimes interest rates go up and the market goes up. Sometimes the opposite. You know, you have this very different behavior, and you really can't rely on that one variable. But I think going forward, we're now midway through a bull market, which will continue into 2018, 2019. Yes.
Okay. Midway through the bull market. So
I would say about midway through. Yeah.
A lot of people think we might be at the start of a 2003 to 2007 kind of cycle. Do you think it's different? We've already reached halfway through that bull market.
No, because if you look at the history, 2007, if you look at any of the indices, emerging market indices, you'll see that we're now below that high in 2007, and we could see about a 20% excess above that 2007 high. So we've got a ways to go.
So does telecom as a space interest you in India over the next, say, 2 to 3 years?
Definitely. Well, when we say telecoms, it's now becoming data comms, you might say, in the sense that it's not only speaking on the phone, but it's the tremendous amount of data that's being pushed through these pipes. And the use of that data is going to have tremendous implications in every field, whether it be medical, financial, social, you just name it, and we're in that situation where things are changing very rapidly. And you're getting a situation where in the hinterlands, in the rural areas of India, they are leapfrogging into the newest technology, which is quite remarkable.
For years, your biggest bet has been HDFC Bank, and in your funds, in the private sector banks and private sector financials, they have dominated portfolio. Of course, they have dominated the index as well. Do you think that will remain the dominant theme as far as the Indian market is concerned?
I think there's going to be more of a shift towards the state-owned banks.
Okay.
Because of the recapitalization that's taking place, that the government is implementing, that'll make these state-owned banks look more attractive.
Wow, you've given us a big headline. So you are moving some money to state-owned banks?
To the state-owned banks. Okay. Be more in that direction.
But you don't think that there's a belief that they will once again make the same mistakes and once again get into trouble?
Oh, they will. There's no question about it. But it's going to take about 5 years for that to happen. I mean, I know the government has said, look, they've made banking reforms and it won't happen again. But you and I know that this is bound to happen. Yes. That they'll get careless again. But the good news is at least they, once you recognize a problem, which this government has, and have tried to do something to ameliorate it, to do something to correct the problem, that's a huge step in the right direction. So I believe, going forward, it won't be as bad as what we've seen before. And the degree to which the government is able to further sell shares of the state-owned enterprises, the banks, that will also help. Because, one of the key themes nowadays is governance. We are under tremendous pressure from our clients who say, look, we want you to work on governance, we want you to work on the environment, we want you to work on social issues, ESG. So that's a big theme going forward, and you're going to see foreign investors as well as domestic investors putting pressure on these companies and banks to behave themselves and not go overboard.
So would we be looking at you putting fresh money into PSU banks, or would it be moving money from private to PSU?
It'll probably just be a natural growth. In other words, as we are growing, as more money comes into our funds, we will naturally put more money into the state banks.
Okay. The other big theme that you've played on is commodities, especially global commodities.
Yes.
Are you still looking at a surge in commodity prices, and how would that correlate with what's happening with the Indian metal stocks?
Well, you've already seen a surge in some prices. If you look at the commodity index, you'll see it came down and now it's sort of puttering along at the bottom. But if you look at some individual commodities, they've spurted ahead. You must remember, when you're starting from a low base, the percentages can be tremendous. A lot of people don't realize that from the absolute bottom, oil prices have gone up by 90%. If you look at palladium, one of my favorites is palladium because it's used as a catalytic converter for gasoline engines, and of course, China is still producing millions of gasoline engine cars. That commodity has gone through the roof. It's really gone up. And certain other commodities like components for batteries, those commodities are going up a lot. So I believe that you're going to see a recovery of commodities. Simply because, you know, the demand for commodities is not stopping. The demand continues. A good example of China. A lot of people say, oh, China's importing less iron ore. Well, yeah, in value terms, it's gone down. But in quantity, it's gone up. If you look at the two charts, in value, it's like this. In quantity, it's like this, continue to go up.